Hello and welcome to Better Offline, live and direct, coming at you from the middle of nowhere, the center of everywhere, and I'm your host, Ed Zitron. Better Offline. Feels like forever since I talked directly to you, my dear listeners, so I'll get right to it. And as a reminder, I'll be including links to everything I'm talking about in the episode notes. And if you're just catching up, all you really need to know here is that OpenAI makes large language models like GPT and, of course, the product ChatGPT. Anthropic makes Claude, a similar product, and that generative AI products have yet to really prove a use case that justifies them losing money on every single transaction. Let's begin. August 2nd, 2024 was Black Friday for the AI boom, as a week of rough earnings from big tech led to what felt like the entire media industry asking one question. Is the AI bubble popping? And that's the question I'm going to try and answer for you today, and in the next episode too. The Guardian sought to answer why the big 7 tech companies had been hit with AI boom doubts. CNN asked, has the AI bubble burst? And The Atlantic suggested, several months too late, that the generative AI revolution may indeed be a bubble. The Financial Times reported hedge fund Elliott Management told investors that Nvidia was a bubble, and Bloomberg reported that big tech had failed to convince Wall Street that AI was paying off. It's all part of a growing trend, where people are suddenly realizing what I've been saying for months, that this unprofitable, energy-hungry technology that creates mediocre outputs is not actually the future. It's just another cloud doohickey. Not a great way of putting it, I realize, but this is my nice way of saying generative AI isn't completely useless, but the large language models, they kind of are based on the costs. These articles were, for the most part, talking about the sudden and violent declines in the share prices of companies like Microsoft, Amazon, and Google, which, for the most part, haven't really recovered. And as of about August 10th, are down significantly over the past month. Although these articles didn't say anything particularly new or reveal any individual missteps or scandals that might have prompted the slide, they hinted to a broader awareness among Wall Street that the AI ambitions of these companies, and by which I really mean generative AI, will require these massive upfront investments, and the payoff might not actually be there. And at least, if it is, it's not going to be there for a while. We're talking years, if not a decade. And once a narrative gets settled, it's very, very, very hard to move it. While the stock market isn't always rational, check out Tesla for more, the one-day sell-off of these stocks and the comments from analysts and industry figures that followed suggest that Wall Street is growing increasingly uncomfortable with the vast amounts of money required to build and grow generative AI into whatever the fuck that's meant to be. These companies, while still making over $10 billion in profit, of course referring to Microsoft, Google, Amazon, and the like, in the last quarter alone, have also spent an absolute shit ton of money on infrastructure to capture the so-called demand for cloud services from generative AI. However, one little problem. None of them seem to actually be making that much money from the thing they're investing in. In the last fiscal year, Microsoft's CapEx, their capital expenditures, was about $55.7 billion, which is up 75% year over year, with more than one-third, $19 billion, spent in the last quarter ending June 30th, 2024. This is reportedly split 50-50 between infrastructure and technology, which suggests an aggressive data center build-out, with Chief Financial Officer for Microsoft, Amy Hood, saying that the company expects capital expenditures to increase on a sequential basis, given cloud and the, and I quote, AI demand that, as I've repeatedly said, is not really there. And what exactly does increasing on a sequential basis mean in dollar terms? I have absolutely no idea. It's vague and perhaps vague enough to rattle the markets, particularly when Microsoft will be starting from an already quite high valuation. Worse still, Hood added, and I quote Microsoft's earnings calls, that AI-related spend represented nearly all of our total capital expenditures, with roughly half for infrastructure needs that will support monetization over the next 15 years and beyond. Ugh. In essence, Microsoft spent $19 billion in the last quarter on cloud and AI expenses, and has made it clear that it's not done spending more money than it's ever spent before on a technology that neither makes Microsoft nor the people paying them that much money. It's very stupid. And for context, Microsoft made $22.04 billion in profits in Q2 2024. Is this really worth sinking an entire quarter's worth of profits into? Let me give you another way to look at it. Microsoft's net profit margin has dropped from 39.44% in Q3 2023 to 34.04% in Q2 2024, meaning that it's taking home less money than it usually would because they're really investing in this thing that only loses money. It's very good. It's very good that this is happening. This is what you love to see. The other cloud providers aren't really doing much better. Google's capital expenditures are forecast to be $50 billion in 2024, and it spent $11 billion in Q4 2023, driven by, and I quote, mostly by technical infrastructure, meaning servers and data centers. And $12 billion was what they spent in Q1 2024. The reason I'm not breaking things out much with Google is because it hasn't been extremely guarded about its AI expenses, probably because they're really high and they're not making any money from it. Amazon's similarly guarded, with its capex last year hanging somewhere around $48.4 billion. It's spent $30.5 billion so far in 2024. An absolutely ridiculous amount considering its profit for Q2 2024 was $13.48 billion. They're just sinking their profits into these things. And there's really no sign that anything changes. Every hyperscaler has said that they intend to keep spending all of this money on AI. And I haven't even mentioned companies like Oracle, which expects to spend $10 billion on cloud infrastructure this year, with much of that new capacity going to support Microsoft and Google Cloud. I don't know what happens if they don't need it anymore. Anyone think about? Anyway. But no, Black Friday, it was a collective realization of the scale and the cost of AI, and the first signs that the markets are starting to ask those annoying little questions about whether it's actually worth it. Yet the real chaos, and one that, comparatively speaking, slipped under the radar, came in the form of one of my pale horses. Last month, I put out an episode called Pop Culture, where I suggested that the first signs of the AI bubble's collapse would be in the failure of a major AI company, though one not operating at the scale of, say, OpenAI. And I specifically picked one out, Character.ai, which raised $150 million in funding, and the information had already hinted might sell itself to one of the big tech companies. Now, the reason I picked them is that their app, which allows you to talk to AI chatbots of Elon Musk and Satoru Gojo from Jujutsu Kaisen, the anime and manga, which we all know I'm tired of waiting for, that's not a business, by the way. And they never really had a sustainable business model or really a meaningful product. And their $150 million raise was the first big, stupid capital raise in the generative AI boom, early 2023, when nobody else could raise at all. In my opinion, their continued existence, other than being a disgusting insult to company building and startups everywhere, was proof that the bubble existed, and their death, or whatever form this really is a sign that the tolerance for bullshit is leaving the market. As my blunt force foreshadowing suggests, on Friday, August 2nd, and yes, most of this stuff happened on that Friday, Google said that it would license Character.ai's technology and hired the company's leaders, Noam Shazir and Daniel De Freitas, along with their research team of 30 people, to work at Google's DeepMind AI division. The fates of the other 140 employees remain uncertain. I assume they're alive, but I imagine some will remain on as staff as the Character.ai app remains operational. It's a strange, sad end for a company that never really had any business existing and in many ways feels like a con happening in broad daylight. Shazir and De Freitas are both former Google employees, having left the company in 2021 to create Character.ai. It's unclear whether, given their previous employment, they'll be required to wear the Noogler propeller hat that you get if you're new to Google. I actually don't know if they still do that. Email me. It's easy@betteroffline.com. That's the letter E, then the letter Z, or Z, for my British and Canadian fans. If you know about this propeller hat, or indeed can get me one, I would very much like one. Anyway, while this is being framed as a typical licensing employee poaching deal where nothing acquisition adjacent has happened, it is actually an acquisition. Google's paying $2.5 billion to investors. Employee stock options will vest. And that means when you get stock in a company, it usually takes time for you to actually earn it so that you can't just take it and leave it immediately, as I would. And that will keep vesting until July 2026 at the acquisition rate of $88 a share, paid for by the money from the licensing deal that is not an acquisition from Google. But after that point, you're shit out of luck. It's no longer guaranteed. This is a terrible situation all around for everyone other than the earliest investors. It's another great situation where the bad guys win. In essence, anyone who has options that aren't fully vested by July 2026 may be shit out of luck. And Character.ai's original funding valued them at $1 billion, making this a situation where Andreessen Horowitz saw a 1.5x return on their investment in a company that never really did anything. Employees kind of got screwed, maybe they didn't. It's unclear. But what is clear is that as of now, Character.ai is effectively dead. The company will shift from using their own models, their literal only thing that they did, to publicly available open source large language models like Meta's Llama, and the original engineering team is effectively gone. The company will likely shamble along lifelessly until it curls up in the corner like an old cat, except an old cat has more purpose and meaning in the universe than a bullshit chatbot company. So why does this matter? On one level, the death of Character.ai is an indicator of the unsustainability of many of these generative AI applications and companies. Even with $150 million in funding, which is a decent amount of money for a normal company, Character likely couldn't keep the lights on for very long, which kind of made it necessary for them to be absorbed or acquired before they shut down and embarrassed everyone involved. It's also just like a charlatan's Olympics. This company sucked. It never made money. It didn't really do anything that different. But they just get bailed out. These fucking startup people, they always go on about the meritocracy. They're always going on about, it's about working hard. It's not about your circumstances. These jackholes, these fucking idiots, they got to sell their bullshit company to Google, a company they left to found it. It's just so annoying. And this agreement also strongly resembles an earlier one between Inflection AI and Microsoft, where Microsoft bought Inflection's technology and team without actually acquiring its equity, so the actual stock in the company. Founded by DeepMind co-founder Mustafa Suleyman and LinkedIn co-founder Reid Hoffman in 2022, Inflection was, in layman's terms, intended to be a more emotionally aware version of ChatGPT. Just 1 year after its creation, they'd raised $1.3 billion at a valuation of $4 billion. As I've noted previously, I believe that Microsoft's acquisition of Inflection was an attempt to avoid regulatory scrutiny by structuring an acquisition as a transfer of tech and talent rather than buying the company where the tech and the talent lives. And yet I'm also convinced that Inflection would struggle to last out on its own, even with its smaller user base and with a $1.3 billion war chest, and eventually it would have had to get acquired or just die. Regardless, I'm beginning to see a pattern. AI's point of failure is shifting, or more accurately, centralizing. At one point, the burden of this entire generative AI farce was shouldered by a large and disparate group of startups and investors, and it's now moving to a few shoulders, those of giants like Microsoft, Google, Amazon, Meta, and to a much lesser extent, Apple. The two most prevalent large language models, outside of course of Meta's Llama, OpenAI's GPT and Anthropic's Claude, are effectively big tech's welfare recipients, receiving billions of dollars in cloud credits to run their extremely expensive models without having to build their own infrastructure. It's also kind of a con, because that's not real money. That's Chuck E. Cheese tokens. And how are those valued? $10 billion goes to OpenAI, mostly in cloud credits, and they get equity in return. That doesn't make sense. I can't invest in companies in air miles. Why can Microsoft do it? Anyway, Microsoft invested billions of dollars in OpenAI, and Google and Amazon are propping up Anthropic too, with the latter completing its $4 billion investment in the AI company earlier this year. I need to be clear that OpenAI and Anthropic are wholly reliant on the mercies of a handful of trillion-dollar companies who are themselves at the mercy of the rot economy and the public markets. And especially in the case of OpenAI's relationship with Microsoft, they're not just dependent on big tech firms' financial support, but also on their ability to procure and build the actual infrastructure of these products. OpenAI does not have their own servers, neither does Anthropic. Perhaps they have a few, but the majority of their actual processing is done by big tech firms that paid them in Chuck E. Cheese tokens, in cloud credits to run their services. Who knows how you even amortize that? It's completely insane. It drives me insane that they're able to do this every time they find a horrible little thing to do. But me, I'm at the mercy of one of the fine products that you'll hear after this ad break, one that will no doubt echo my exact thoughts, feelings, and desires. Buy their things or don't. That's up to you. And we're back. As I was previously saying, Friday, August 2nd, 2024 was a rough day for AI, and it somehow got worse. That same day, the information reported that Nvidia has reportedly told Microsoft and another unnamed cloud customer that its next-generation Blackwell chips, which are designed primarily for accelerating AI compute tasks, will be delayed by 3 months due to an unspecified design flaw identified by its contract foundry, TSMC. It's entirely possible that this flaw takes a little more than 3 months to resolve. Semiconductor manufacturing is really hard, and issues that initially seem minor can rapidly spiral out of control. On top of that, you can't rush them in the same way you can with software. You can't just throw a bunch more money. TSMC has plenty, but on top of that, this isn't a money problem. This is one of those scientific ones that you can't just skip over. And with Blackwell representing a major leap forward in capabilities, both in the terms of power efficiency and sheer compute power, this is a huge blow to OpenAI and its many competitors, by which I mean its other competitor, which is also bankrolled by a big tech sugar daddy. It's also likely to delay some of OpenAI's grander ambitions for an indeterminate amount of time, which in turn kind of dampens its appeal to potential investors. And to be clear, OpenAI basically has to raise in the next 6 months, as the information reported that OpenAI could lose as much as $5 billion this year alone. I will get to that later, but just to be clear, that's not $5 billion in losses plus revenue. That is after you take the money out that they made. It's really bad. It's really bad, though. It's all so very bad. I'm not sure why more people aren't freaking out. I'm mostly chilling just because I don't really care if they live or die. I feel bad for the people with the jobs, but I'm rambling. We'll get back to it. And this is a problem that expands to Google and Microsoft too. Nvidia's Blackwell chips were supposed to be a major technological leap for generative AI, designed with both inference, the way that large language models generate answers, and training in mind, and thus providing vastly more compute power and energy efficiency necessary to make this shit move. But as of now, these chips have been delayed, with their availability not expected into the first quarter of 2025 at the earliest, and the information reports that OpenAI probably won't get access to them until March 2024. And Nvidia might be forced to do new test runs with its foundry partner before scaling up to mass production. One particularly worrying quote, and I kind of just hinted at it there, was that Microsoft managers had planned to make Blackwell-powered servers available to OpenAI by January, but, like I said, may need to plan for March or early spring. And that was said by a person with knowledge of the situation. Beautiful name. The reason that's bad, well, it's not really just one. First, OpenAI desperately needs something new. They need something that will show both investors and the media that OpenAI is building something meaningful, and while it's possible it will be able to deliver GPT-5, which is their next model, in the near-term future, even potential customers don't believe the jump will be significant enough from GPT-4. Second, for reasons I've alluded to at the start of this episode, investors are getting a touch itchy with the AI hype boom, and more specifically with the giant tech companies that are bankrolling it. The street needs to see results, or at the very least a plausible case for the future profitability and marketability of generative AI, a thing that it's genuinely bad at. Nvidia's Blackwell chips could help OpenAI models run faster and ingest training data faster, as well as, even if it's not possible, fooling investors into believing that OpenAI had the latest tech and thus could build the average general intelligence that Sam Altman's been lying about and allow him to continue his con. Regardless, the article from The Information put it very plainly. OpenAI only gets access to the latest technology as fast as Microsoft permits, or as fast as Microsoft is able to provide it. On their own, even one of these events would be a deeply worrying sign of the bubble popping, and together they've threatened to begin a collapse that I've been predicting since March, where I said that AI companies had about 3 quarters to prove themselves, and I quote, savaging the revenues of the biggest companies in tech when things don't work out. But I've realized now that it isn't really super useful to attach things to time, though I stand by my prediction, and thus I think it's more illustrative to suggest what the terms of the bubble popping actually are. So, let's define them. What do I mean when I talk about the bubble popping? For the sake of clarity, I'm defining it as the major cloud companies reducing capital expenditures related to generative AI in a public and significant manner, as in an actual statement from Satya Nadella at Microsoft or Sundar Pichai at Google, or one of the major large language model companies, Anthropic or OpenAI, collapsing in some way. No cheap thrills, no half measures. We're not calling this fucking thing until it actually pops, and it will not pop until one or both of these companies go tits up. To be clear, when I talk about Anthropic and OpenAI collapsing, I don't actually mean in the Enron-style way. These companies are probably not going to fall apart, shut down, close their doors suddenly. It could be that they're absorbed into another company on unfavorable terms, like Character.ai and Inflection, like the things that just happened. And in that case, I think investors are going to take a massive loss. OpenAI or Anthropic might be forced to radically limit their operations, either by shutting down their free chatbots or limiting access to enterprise customers, or by slowing down development massively, which, by the way, will be death's embrace. It will be over. We could see massive layoffs, or we could see these companies pivot to a less capital-intensive business model, such as licensing their patents and IP to other technologies or companies, but not really offering an actual tangible product to consumers or business customers, as opposed to what they're doing today, which is offering a tangible thing that doesn't really do that much. I'm rambling again. Yeah, I can imagine all sorts of terminal endings for generative AI is big too, and some of them aren't even legally actionable. But I believe that the collapse or absorption of these companies is the one critical sign to look for. OpenAI began this hype cycle, and Sam Altman is definitely the P.T. Barnum of the large language model circus. And OpenAI has absorbed more money and attention than any other startup of the last few years, and outside of Uber, I think they might be getting the most all time. God, I hate it. It's symbolic of the excess and the waste of the generative AI boom, and its death, or as I mentioned, some alternative collapse, is the sign that we're done here, in the same way that FTX signaled the end of the cryptocurrency boom. And if OpenAI's collapse marks the apocalypse for generative AI, I believe it will be accompanied by one or several of the following pale horses, real, tangible signs that things are falling apart, things you can send to your friends and family and laugh at. Let's take a look, shall we? Number 1. Any significant price changes by any large language model company are a bad sign. Desperate times require desperate measures, and any oscillation in pricing is a bad sign. We could see a race to the bottom, which is kind of already happening, with model developers releasing increasingly cheaper options to grow revenue and build their customer bases, which is an idea that only makes sense if the underpinning technology is profitable, which generative AI is not. And it's already kind of begun, with OpenAI's reduced price GPT-4o Mini and Google Gemini's Google Flash 1.5, I believe it's called, and they just reduced that pricing to compete with GPT-4o Mini's cheapest option. This is totally unsustainable, which means it fits right in with the rest of the hype cycle. Conversely, if prices start increasing, this is a sign that the company's getting really, really desperate and have to find a way to start recouping the massive costs of the unsustainable shit show they've been participating in. Now, this, I think, is probably one of the later ones. If they do this, if they even get to it, it's just a sign that things are falling apart. I also think we're going to see stories about general discord in AI investment. Any articles you see about investors fleeing private AI deals, as they did with the metaverse, are a sign that things are falling apart. And the things I'm hearing, by the way, is that this has already begun. But that's anecdotal. Don't take my word for it, just watch the media. We might also see stories about OpenAI having trouble raising money. Up until now, there haven't been any rumors about them having trouble, despite the fact that they're expected to lose, like I mentioned, $5 billion in 2024. They need to raise billions of dollars, and they have to do it soon, and if they can't raise, nobody can. But moving on, there's another harbinger to look out for, and it would be evidence that Google or Microsoft is reducing their capex, as discussed. Because it's really important to realize that venture capital and Silicon Valley really are not, they're not the ones propping this up. They might be the cheerleaders, they might be the ones talking about how important it is, but Google and Microsoft are the ones holding this up, and Amazon as well. They're the ones who are bankrolling Anthropic and OpenAI. Microsoft, as I will get to, basically owns OpenAI. If those companies decide they don't want this to continue, it will stop. Venture capital cannot afford to keep OpenAI alive. But moving on, you should keep out a beady little eye for any discord within any of the major players in generative AI. But I'm not talking about OpenAI and Anthropic. I'm talking about companies like Scale AI, who are a training data company that's raised over $1.5 billion, and Cohere, another large language model company that recently raised another $450 million from Nvidia and Salesforce. And Salesforce, they've been talking about doing AI for like a decade. I don't know what product they sell. I'd watch those two very carefully. They're seen as stable, revenue-generating, yet, as discussed, unprofitable, ancillary firms that will likely need to raise again in the next 12 months. If we hear about problems such as employees being unhappy or troubles fundraising or making money, this means that people on the inside are making nasty little noises because they know things are falling apart. And the same, by the way, goes for any discord in OpenAI or Anthropic. This one's obvious. If we hear there are problems, they're worried, or if they're getting worried, if they can't raise money, if they're losing people, which is kind of already happening, if they can't seem to make a deal work, if they're having trouble progressing their software, anything about these companies is probably a bad sign. If I were you, I'd keep an eye on the Washington Post. Natasha Tiku's done great work there, as the people like Shira Vide and Jeffrey Fowler, but Natasha's done some great work on Mr. Altman. The Information has got some great people doing work on this. Reuters, TechCrunch, 404 Media. They're the ones I keep an eye out for. We've already seen a little bit of this happening already. A few days ago, OpenAI lost two of its co-founders. John Schulman left for competitor Anthropic, and Chief Operating Officer Greg Brockman has gone on something he's calling extended leave. As an aside, this is objectively one of the funniest things anyone has ever done in tech. Yeah, man, nothing big going on. Enjoy your vacation, mate. Not like the entire industry is falling apart. Not like the bubble might be popping. Enjoy Carbo! Anyway, as things get especially bad, I think we're going to see discussions of layoffs. Based on people I've talked to, generative AI companies are paying these massive salaries in stock and cash. And they're not run particularly efficiently because they are really driven by dreamers, by which I mean con artists. If AI jobs are no longer these cushy little hidey holes for the most expensive engineers in the valley, things are going to sour fast, because they need the best to do this mediocre crap that you see every day. But I'd argue the biggest and most desperate of these pale horses would be some sort of big, stupid magic trick. No, really. As these companies get desperate, expect someone, especially OpenAI, to try and show something new and crazy as a means of trying to turn this narrative around. When or if this happens, look very carefully at what they say about the product's availability, what it can actually do, or who they show it to. Is it available publicly? Are there limitations on it? And are there any weird terms and conditions to look out for? If OpenAI gets desperate, it may move up the public launch of Sora, its generative video product. Doing so is really only going to cause more problems. There isn't a chance in hell that this thing is profitable, and I am 100% confident that it's much, 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 much more expensive than the video and the text-based generation tools they already have. And I imagine its visual inconsistencies and hallucinations would make for some entertaining content for YouTubers and tech reporters, which will mean that they just have hundreds, thousands, hundreds of thousands perhaps of people requesting shitty videos off of this thing, burning servers, quite literally in this case, losing the money. And for what? How much can they charge for this thing? Because it's not going to be enough. The common thread between all of these events is that they're all expressions of desperation, fear, and a total lack of confidence in the underlying company. So far, and this is napkin maths, I'd estimate that a total of $200 billion has been spent to get generative AI to this point. In infrastructure, in funding, in energy, in so many different meaningless ways, all to get us to the point that we have a tool that's really good at generating things that aren't as good as what a human could make, and only sometimes are they good enough to actually use. To be clear, we're not quite at the bubble popping yet. The reason I chose the collapse of OpenAI as the event is because it will mean that Microsoft decided to cut them off, and that there wasn't enough banker or venture capital interest to prop them up further. OpenAI's collapse would be both financial and symbolic, the sign that the Valley would let a company die, and that this idea was not good enough for everybody to stake their futures on it. In any case, things could change. The bubble could stay inflated. But while you're thinking about how, why don't you take a breather to hear from someone, one of our wonderful, beautiful, precisely chosen advertisers that you simply must pay money to. And we're back. Now, I don't want to give you any homework. I know you're currently holding up a convenience store or maybe trying to get a hubcap off of a car wheel. You hear me speak enough, but a few weeks ago, I wrote a newsletter called How Does OpenAI Survive? An 8,000 or so word analysis of how difficult it's going to be to keep that company going at its current burn rate. To simmer it down as quickly as possible, OpenAI costs about $8.5 billion a year to run, and only makes about $3.5 billion to $4.5 billion a year in revenue. A number, by the way, that does not sound right, but it's what's being reported. OpenAI's costs are increasing linearly, and generative AI, as I've said a few times, is deeply unprofitable and unsustainable. Making OpenAI's models better, which doesn't necessarily mean they're more valuable or more useful, also costs hundreds of millions, if not billions of dollars. As a result, OpenAI needs to raise more money than anybody has ever raised in the history of the Valley in the next 12 to 24 months, or launch a product so significant that it blows ChatGPT out of the water and actually is profitable. And these things are unlikely, but possible, I guess? Microsoft, Google, and Amazon could somehow change the narrative, but doing so too would require some sort of technological breakthrough, or a very obvious product that would make people money, more money than is being spent on the thing. And the markets are also capricious, and thus I really wouldn't count on there being a narrative turnaround, especially with the shifting sands of investor sentiment. As I've mentioned previously, on August 2nd, Elliott Management, the hedge fund with over $70 billion in assets under management, said in a letter to clients that AI is overhyped and that Nvidia is a bubble, adding that AI had not delivered value commensurate with the hype. While it's possible there are others that dissent against the rapidly forming consensus against generative AI to prop things up, which I do think is possible, especially if you're deep in the hole with Microsoft or Nvidia, it's worth putting Elliott Management's note in a broader context. It's only the latest voice in a loud, or at least increasingly louder chorus of critics, whose members include esteemed analyst houses and some of the largest investment banks in the world. Goldman Sachs put out a report in July that you've heard in the pop culture episode that said generative AI was too expensive and didn't solve the complex problems that would need to justify their expenses. At the end of July, Gartner put out a report predicting that 30% of generative AI products would be abandoned entirely after a proof of concept by end of 2025. And the Washington Post reports that Barclays Bank thinks that, and I quote, Wall Street analysts are expecting big tech companies to spend around $60 billion a year on developing AI models by 2026, but reap only $20 billion a year in revenue from AI by that point. Little asterisk on there for you. That does say revenue. That doesn't say profit. And by the way, that's only $1 billion more than Microsoft's entire capital expenditures in the last quarter alone. Microsoft also has a storied history of pumping and dumping ideas. For Microsoft, augmented reality was, and I quote, an absolute breakthrough in 2019, before it was quietly shoved in a corner with mass layoffs and business line closures a few years later. In 2021, Satya Nadella, their CEO, couldn't overstate how much of a breakthrough the metaverse was. Yet 2 years later, and big props to Preston Growler of Compute World for saying this in February 2023, he laid off most of the people involved and bet everything on artificial intelligence. And that bet everything thing, that's a headline from Wired magazine. Very good. It's also important to remember that Microsoft effectively owns OpenAI. As part of their 2019 funding round, which I believe was $1 billion, Microsoft has full access to all of OpenAI's intellectual property and research. Which begs a thorny little question. Why at this point would Microsoft give OpenAI any more money, other than to save face? Though it's a very real possibility that Satya Nadella is surrounded by yes men who don't know what they're talking about, Microsoft also has access to sell OpenAI's, and I quote, pre-AGI products, which is all of their products right now, and full access to all of their research, as well as, and I quote, certain rights to OpenAI's intellectual property. Unless OpenAI is capable of delivering something meaningfully different, something Nadella can wave in front of analysts' faces and show them that they can automate all of these jobs away, its existence is just another cost center, and one that could get eliminated in a tough quarter. And to be clear, Satya Nadella has been extremely frank about his leverage over OpenAI and its effective ownership of their tech, albeit buffeted with the usual bullshit platitudes and niceties that you'd expect from a shape-shifting tech CEO monster. In a late 2020 interview with PR person Kara Swisher, Satya Nadella said, "If OpenAI disappeared tomorrow, I don't want any customer of ours to be worried about it, quite honestly, because we have all the rights to continue the innovation, not just to serve the product, but we can go and just do what we were doing in partnership ourselves. We have the people, we have the compute, we have the data, we have everything." Mr. Nadella, that is an insane thing to say, and the kind of thing you'd only say to someone like Kara Swisher. Swisher should have made that the headline, that Microsoft effectively owns OpenAI. I miss this at the time. I found out about this quote like a week or two ago. It's crazy to me. It's crazy to me that this was said and it's not front page news. Microsoft owns OpenAI. Who gives a shit about the non-profit structure? But it actually gets better because he followed up that quote with this. Microsoft's investment of $13 billion in OpenAI gives us significant rights, as I said. And also this thing, it's not hands-off, right? We are in there. We are below them. We are above them. We are around them. We do the kernel optimizations. Very funny if you consider the CrowdStrike thing, by the way. We build tools. We build the infrastructure. So that's why I think a lot of the industrial analysts are saying, oh wow, it's really a joint project between Microsoft and OpenAI. The reality is we are, as I said, very self-sufficient in all of this. While I'm not saying it's for certain, Microsoft can, very clearly, if they so please, simply drop OpenAI and keep all of their stuff. Nevertheless, as the market's sour on generative AI, I think it's time for big tech to prove something. It's time for them to prove that this wasn't all a huge, big, stupid fucking waste of time and money. To continue with their current paths, Sundar Pichai of Google and Satya Nadella of Microsoft, as the loudest of the publicly traded generative AI hype men, will have to show everybody something remarkable. But even then, they will have to show how it actually makes money. And if they can't, at least in the case of Satya Nadella, they can still walk away as winners. In the best case scenario, these companies would either have to dramatically reduce their costs, something they've really shown they're not capable of doing and in fact have said they'll do the opposite of, or show ways to make generative AI so significantly efficient that it somehow finally balances itself out. What we're really waiting for now is for somebody to blink. If none of the major cloud companies change course over the next few months, we could potentially see this boom continue for another quarter. And just to be clear, they're usually in lockstep. They love holding up each other's oligopolies and monopolies. They love being a weird cartel that sells data. To continue, though, they'll have to commit billions of dollars in, at the very least, cloud credits for OpenAI and Anthropic, as neither of those companies can survive without further cash infusions. They'll also have to find some way to make any of this useful and profitable. Two challenges that generative AI has never really been able to deal with. Not even once. And just as an aside, I've had people email and saying, well, I use it for this. I was on a show the other day who said he uses it for show notes. These are all fine, whatever. These are like little use cases. These people need this to make $1 trillion. Show notes aren't going to do it. Shitty translations are not going to do it. A picture of Garfield with a gun is not going to do it. And big tech is going to have to figure out a way to support these companies in the face of rising disquiet among shareholders who, in the most recent rout of AI companies, lost them about $2.6 trillion in market capitalization. As I pointed out in the shareholder supremacy, investors don't really care about the future or innovation. They just want profits and their portfolios to get bigger, and they want to see the number for profit go larger and the costs go lower, and absolutely nothing else matters at all. Which is why they love generative AI at first, because if this actually made a bunch of money, this is a way that Microsoft could just route cloud costs from themselves to themselves. I'll get to that in a future episode about monopolies, though. And I think that if generative AI becomes an albatross around the necks of Google, Microsoft, and Amazon, which I really believe it will, these companies are going to face really nasty pressure to curtail their investments and their capex. Investors will ask why these companies are spending a collective $200 billion by the end of 2025 on a technology that likely won't drive much revenue growth, when it could be used for things like stock dividends and stock buybacks and, I don't know, thrones for the demon lords that live underneath the offices. I don't know how Microsoft truly makes money. That's a joke. Don't email me about it. But I believe in any case, the next month is going to be critical to the future of the AI boom. And I believe this is a time for industry-wide introspection, and to really consider everyone's roles and why this bubble existed in the first place. In the next episode, I'm going to take a closer look into OpenAI's likely demise, what it looks like, and why the company's few avenues for salvation, in fact, look like dead ends. And I'll get into how fucking ridiculous this whole bubble is, and what its potential collapse spells for the future of the tech industry. Thank you for listening to Better Offline. The editor and composer of the Better Offline theme song is Matt Osowski. You can check out more of his music and audio projects at mattosowski.com, wski.com. You can email me at easy@betteroffline.com or visit betteroffline.com to find more podcast links and, of course, my newsletter. I also really recommend you go to chat.wheresyoured.at to visit the Discord and go to r/betteroffline to check out our Reddit. Thank you so much for listening.
Better Offline is a production of Cool Zone Media. For more from Cool Zone Media, visit our website, coolzonemedia.com, or check us out on the iHeart Radio app, Apple Podcasts, or wherever you get your podcasts.